What is up, you guys? Pete DiCarlo here, and today I want to talk very quickly about the current state of the stock market. I have a lot of people, and it seems like every single week and every single year and every single month, even people are saying that the stock market's going to crash, that we can't hold the levels that we're at right now, that, they're going to start liquidating their positions, that they're going to go ahead and get puts or hedge their portfolio, which I'm not against any of that. I'm really not. But I kind of wanted to take a couple minutes to bring to your attention technically from a very long time frame, right? This is nearly a 10-year chart. The state of the stock market from a technical standpoint as well as from a fundamental standpoint on both sides of the spectrum, and how I would really be playing my long-term portfolio going into the next year and kind of formulating my trading going into the next year. Because as of right now, I don't have any long positions. I feel like 99% of the stock market and 99% of the companies within the stock market are extremely overvalued. And I don't think that there are a ton of deals out there unless you want to bring on an insane amount of risk. So what I've really just been focused on this past year is trading, which I do anyway, and mainly selling puts, which I talk a lot on this channel about. However, it seems as if many people are really worried about the current state of the stock market, and they have reason to be too. So let's take a look at just the past year of how the stock market has been doing. If we go ahead and we just look at this 1 year chart, you can see that since lows of last year, we are up massively. I mean, I don't have any indicators set up here at all. I just have a trend line. I'll get rid of this. I have no indicators set up at all right now. But you can see that from lows of March last year, the stock, S&P 500 or SPY ETF, which is what we're looking at today, was trading around $217 at lows. And since then, it is up 93% within a year. Now, of course, we had a major sell-off where the stock market, because of the pandemic, I hope I can still say that word without, YouTube getting mad at me, but because of the pandemic, the market dumped nearly 35% because there's a ton of uncertainty and a ton of greed in the market. Remember, when there's uncertainty and greed, those are the two things that drive the stock market. Greed is strong. Uncertainty and fear is much stronger than greed. So the stock market sold off 35% for good reason, but still, even if you look at the shape of our economy, you look at how the stock market was trading before all of this, we're still up nearly 24% in the past 14 months from highs before the market crashed last year, which is insane. Normally, in a really good market, the S&P 500 will go up 9%. Let alone go up 24% and 100% nearly from lows of this time last year. Now, something to think about to yourself, and I'm not going to state whether this is true or not, how is the economy recovered and how is the economy right now versus how it was in February of 2020 before everything hit the old fan? Think to yourself, okay, how are jobs numbers, right? How are we from an economic standpoint doing compared to how we were last year? And the obvious answer is not as great. Now, we have pumped a lot of money into the economy. A lot of people joke about, people, for instance, Fed Chair Powell just printing money. But at the end of the day, that does help the economy, not in a long-term way at all, but short-term, it does prop up the economy. And we have seen a lot of these massive tech companies really hold and prop the stock market up. And honestly, when we look at earnings, just most recent earnings, you look at things like Facebook that had a record quarter that are up massive today. You look at things like Apple, which had a record quarter, not doing too well though, but had a record quarter. Amazon, which is going to release earnings today, probably going to have another record quarter. The big tech companies are doing extremely well. Even look at some companies like Las Vegas Sands over the past year. Let's get a 1 year chart. Have recovered pretty crazy. We're nearly back. If we zoom out, we're nearly back to where we were pre-pandemic for something like Las Vegas Sands. Look at MGM, back up over where we were before the pandemic. MGM is up over from a stock price standpoint. Doesn't mean the company is doing better than it was then, but a lot of these hotel and restaurant stocks, not the company itself, stocks have been doing a lot better. And one thing you have to realize too is that just because the stock market is doing well doesn't mean that the economy is doing well, and vice versa. There are a lot of times when a company is doing really well, but the stock is getting killed, and that's where you go out and you find yourself a good deal, and that's where you find yourself making some good money. Now, I want to take a good look at essentially the past 13 years in the stock market. So we're looking right now at 2009 lows, and we can even zoom out a little bit more if you want and look at 2008, 2009, but let's just look at 2009 lows, and let's look at where we are right now in the S&P 500. So the S&P 500 right now just hit $420 this month, which is all-time highs. And if we go ahead and we draw a trend line, just essentially from all of these supports, you can see that the S&P 500 and or the United States stock market has done wonders over the past 10 years. And basically every single time that we start to pull back, we bounce off of this major trend line. And I'm one of those people that does believe in technical analysis. I don't believe technical analysis is the end all be all. I don't think it's a crystal ball. I think technical analysis and trading is essentially using an edge that you have in the market with probability. The same way that somebody plays poker or blackjack, they have an edge. It is still gambling, right? But it's just educated gambling, and you have to know how to use appropriate risk. I teach all of that on this channel and my other channel, Traders Helping Traders. But when we look at the United States stock market, over the past year, we've gotten to insane levels. This pullback down here, if you can see this right in this area, this was during that correction that happened in 2018 during Christmas. Let me zoom out a little bit, and you can see this happened right here. I'm sorry, 2019 during Christmas, where the stock market sold off all the way down to lows of $233. That means that the S&P 500 at this time dropped 20%, which is pretty crazy. And since then, we have bounced and we have slowly been making our way up. Now, from a technical standpoint, before we even start to talk about fundamentals, let's look at it from technical standpoint here. Do you think that the S&P 500 is overvalued and due for a correction or due for a massive pullback, right? Obviously, taking a look at this, I don't need an RSI. I don't need any indicator to tell me that we are way, 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 way too high. When you're looking at something like a trend line, in this instance here, the trend line, I like to use an example that Alex Elder uses in trading for a living, is it's like a dog and the leash, and the trend line is the man who is carrying or walking the dog. The dog can go a little bit to the right, it can go pretty far to the right depending on how long your leash is. It can go to the left, pretty far to the left depending on how long your leash is. However, at some point, it will always come back to the person who is walking the dog. This will always come back to the mean. In 99.9% of the cases, you can see here that no matter how far in the past 10 years the stock market has gone, it has always pulled back. Now, does that mean that overnight the S&P 500 is going to go ahead and crash 25%? No, of course it doesn't, right? And there's a lot of people nowadays who are like, oh, the sky's falling, the sky's falling. You know, we had 2 months where the market was down pretty hefty. Back in September, the market dumped 10% when we were going into the election. And overall, we can all probably agree that the stock market needs a pullback. Fundamentally, if you look at a lot of these companies, and we're going through, I'll do an entire video on PE ratios soon. But if we look at a lot of these companies and we look into PE ratios, the PE ratio is insane. It's the price to earnings. If you look at a company such as, let's just say, Tesla PE ratio, it's insane. It's absolutely insane. PE ratio is close to 1,700. Now, of course, we're not in Benjamin Graham times or Warren Buffett times where PE ratios need to be 25 or under. That's what I was raised to be told to do. But PE ratios of 1,700 are absolutely insane. Even look at something like Apple PE ratio is in the hundreds, right? Average 41. Okay, I'm sorry, maximum is 41. So Apple's actually not too bad. But if we look at a lot of these other companies, let's look at like AMD PE ratio. You have a PE ratio of 80. Let's look at NIO PE ratio. Now, of course, I'm kind of picking like the big, tech. I want to say big tech, but like the tech companies that are really popular. Well, NIO doesn't have a PE because it's not even profitable at this point. But what I'm trying to get out there is that a lot of these companies are overvalued. There is a ton of money that is out there in the market and the economy, and there's only so much pumping that you can do to stimulate the economy and to stimulate the stock market. There's only so much pumping you can do before everything that we have been doing over the past couple of years and even the past 10 years, before that becomes problematic, right? It's kind of like looking at China right now and how their economy has grown over the past 30 years. Yet, if you look at the backside of that, it's because of a lot of pollution is also happening as a recourse due to that type of economic growth. And it's kind of the same thing. Like, you think that this doesn't have consequences to it. You think that just printing money like it's nothing doesn't have consequences to it. You don't think that stimulating economy to this extent doesn't have any problems or any recourse or any backlash to it. You know, people think that keeping interest rates as low as they are right now, all of these things have repercussions at some point. The problem is, from a politician standpoint or from a Federal Reserve standpoint or from a stock market standpoint, we're just kicking the can down the road until it's not our problem, right? And if you look at the pandemic that we had over the past year, look how quickly we bounced. Like, that should have never happened. Now, of course, we expected people to be dying in the streets. We expected things to be much worse than they were. And I'm not downplaying this. It's absolutely terrible what has happened to a lot of people's families and jobs and the economy and everybody who lost their lives. But, it's like, it's not only did we completely rebound, it's that we are up in the absolute stratosphere right now. And I don't want to talk about the wealth gap too much because I will make a video on that, but this has just worsened it over the past year. But overall, this video is not made to scare everybody and to tell you to go ahead and sell everything that you own and run for the hills, because that's not the case. If you look at the S&P 500 and the stock market in general over the past 10, 11 years, think of how many times you would have missed out on massive paydays and massive profits if you were just worried about losing money and you were worried about, exiting at the right time from a financial fundamental standpoint, right? I'm not talking about trading because that's what I do for a living. That there are times you have to sell, but if you just look at the past 10 years, there are so many times that you could have gotten out and then the market ripped. Look at this, right? Think about if you sold out when we started to get up to around here 340 on the S&P 500, and then it just broke out all the way up. So overall, what piece of advice I would give to you guys is, we all know that the stock market is overinflated, in bubble territory. We all know tech is still in a bubble type of territory. We all know that there's more money in the market than there ever has been ever. We know that the market is more public than it has ever been. We know that there are a ton of retail traders because you can just buy get on your phone, put your social security number in, download an app and start buying. We know there are more retail investors and retail traders than there ever have been. And the two things I want to leave you with is, number one, we know that this is unsustainable. And number two, what I want to ask you is, who's going to get stuck holding the bag? You think it's going to be Wall Street? Think it's going to be these big hedge fund managers? In general, who do you think is going to get stuck holding the bag? It's going to be retail, us, not even from a trading standpoint, but the American people. We were the ones who got stuck holding the bag in 2007, 2008. And it's going to happen again. And I'm not saying it's going to happen now. I'm not saying it's going to happen 5 years from now. I'm not saying I know when it's going to happen, because the truth is nobody does. Like, nobody knows what's going to happen. Nobody knew what was going to happen February of last year in 2020 was going to happen. And nobody knew it was going to be a virus. Nobody knew that. Let's just be honest. Like, everybody thought the housing market was going to collapse. Everybody thought that tech was going to crater. Nobody knew and nobody expected it. And I think that it's going to be much worse than it was, from a financial standpoint, than it was last year, because last year should have been that crash and that bear market, and it wasn't. We didn't really even have a bear market, which is pretty crazy. That whole fiasco, that dump only lasted 35 bars or 50 days, and then it just took another 120 days for us to break back out to all-time highs. So it's not like it was an extended bear market, which I think is what we needed. And if anything, I think that we've just done further damage that we're going to have to deal with in the future. And so overall, guys, thank you for watching this. This is not supposed to be to scare you or to make you worry or to run for the hills. I'm not long-term investing right now, but I am still trading a lot. I am still selling puts. I am still trading with the trend. A lot of what I have is calls because and plays to the upside, because trying to time the downtrend, like I'm telling you this, trying to time the reversal never works out. It never works out. Trying to time when the market's going to peak and dump doesn't work out. Trying to time the bottom doesn't work out. I'll tell you that. But overall, guys, I hope that this video helped. If you want to be a part of my private academy, get access to every single trade I take live as soon as I take it. Live stream with me and my team every morning like this for the first hour of market open. Get access to our private Discord and our 60-hour course library. Use the code Academy90. Get started for $10 your first month. Thank you guys for all of your support. It truly means the world to me. And I'll see you guys next time.